Yes, hello everyone. My name is Rocky Calvin, and I'm here to provide you with a weekly market insight of what really happened last week. And I hope this video is going to be educative to you so that you can be able to understand what exactly happened last week and why we had that bullish move on Nasdaq, US 2000, that is Russell 2000, as well as US 30, and we also have ES. So, apparently, on Nasdaq, we were bearish, and I'm on a weekly time frame, right? So we were bearish, meaning that we were supposed to be going down, right? But the first question when going down, you're supposed to ask yourself is that where are we going to? Because if you don't have a draw on liquidity, if you don't know where we're going to, then it literally means that you don't know what you're doing. First thing first, let's mark out our liquidity pools, or other terms, I call them targets. So we have the first one there, and we also have another one right there. And we also have another one. Yeah, that one right there, and so on, right? So I'm just gonna mark these three for now because those are the recent nearby ones or intermediate ones that I would like us to focus on. So from last week, uh, we were going down, right? And this is why we are going down. I'd like also to see what was happening here. Forget about this other, target, previously low and bullish. These are just my own stuff that I was using during the intra-weekly trading. So don't focus so much on them. Or I think probably maybe let me just remove them so that I don't really confuse you guys. Don't really confuse you. So let me just get rid of them so that we can have a cleaner chart, right? Yeah. All right. So here we go. This week, and actually I'm using UTC plus 3. This is you know where I'm at. So I'm using that, just to that's what I'm used to using. So I don't really want to confuse you guys with the UTC plus 4 that is for New York, and so on. So we had closed bearish. This is the week of March 24th, right? So we're close to bearish. So this one, meaning this one was a signal that we were supposed to continue going lower. So going lower, our first intermediate liquidity pool that we're supposed to be targeting was this one right here, which we took out the following week. Okay. Then price ran down here, took that liquidity pool also, then also came down here, right? So once we were here, I want you to take a look at how we closed, last week. So we had tapped. If you take a very close look, you realize that we had already tapped this low here, just a little bit of it. Hope you can see that, right? So meaning that we had met one of our liquidity pools. So the next one was supposed to be this one. So let me now remove this one. The next was supposed to be this one, and this one, and this one also. Okay, and as well this fair value gap, this bullish fair value gap right there. So price uh, came back in, closed in there. Now moving on daily time frame. Daily time frame. This is our Friday. This is the Friday. This is the Friday. Close. We closed right here. So when we closed here, our next liquidity pool was here. Okay, and as well, this one was also at a liquidity level. But remember, this one we had touched it. We had touched it. If you can remember what I showed you on the weekly time frame, you can see how little we touched it, right? So we had already touched it. So we were going for the next liquidity pool, which was this one right here. Okay, so this is a target. Then after this target, we move on to the next liquidity pool. just look closely, you find there's a bullish fair value gap right there. That's valid. You just gotta mark them. The secret to this game is you have to mark all the possible liquidity pools whereby when price give you a signal of reversal, you already have them in position. Okay? They're important. That's why I've marked all of them. Somebody might say, "Yo, bro, why are you marking every swing point, every fair value gap?" They are important at this point because there was a reason why price went up. It reversed from those. For example, somebody might say, "Why did I mark this one here, or maybe this gap?" But take a look what happened here. Price reversed from this gap here, this bullish fair value gap, and that's what we're going to be talking about right now. So take a look here. Once Friday we closed here, then our next liquidity pool was this ones. You see this one's marked? Yes, those ones. So meaning that we were supposed to be focusing on these liquidity pools. Once they're taken out, we see signs of reversal or signs of price wanting to go up when we have hit up a higher time frame liquidity point. So when we hit a higher time frame liquidity point, we are likely to reverse so that price can also go back up there and hit another high time frame liquidity point, which is now this bearish fair value gaps and the volume imbalance we have right here. Okay, we have a volume imbalance right here on daily time frame, right? And as well, we have bearish fair value gaps. As you can see, we had one here, we had another one there, and there was also another one here. Okay, so there was need for price to go up to go and rebalance those inefficiencies in the market, right? But for price to go and balance them, it has to hit a higher time frame inefficiency to go back and balance a higher time frame inefficiency. Let me repeat it again. For price to reverse or for price to move towards or against an inefficiency, it has to hit a high time frame inefficiency to go back to another high time frame inefficiency. It can be a fair value gap, it can be swing high, swing low, it can be previous month high. It's all about inefficiency and liquidity spots. So price came in here. I want us to see what happened on Monday. So on Monday, on my mind already, I knew that we were going down. We were going to take something, and once we take something, here's where you start looking for signs of buying. And we're going to be talking about something that majority of people did not see or don't know. I'm going to show you something that happened that even gave me a positive signature of looking for buys. So I'm going to remove this one, this liquidity points that have already been taken, and I'm going to retain that last one. This last one, which is this fair value gap, this daily bullish fair value gap, right? So, let's go. So on Monday, we open and we drop down there massively on a Monday. You see how we dropped massively? We opened right here. Sorry, we opened right here, dropped, came back, went higher, came back and closed in. Okay, so when we dropped to this bullish, remember I've already marked the bottom of this. This is the bottom of that bullish fair value gap. Let me put this is the bottom of bullish daily fair value gap. Okay, so it's a very important zone, right? So now we are now moving on into a lower time frame, which I prefer the hourly. Okay, right. I want you to take a look at how beautiful the price action was right here. This is Monday still. This is Monday of 7th of April. This last week, like this week that we're now ending, right? So take a look at how price reacted to that bottom of that bullish daily fair value gap. It it dropped down. Actually, we gapped down. This, gapped down, and its price started rejecting it. And even after rejecting it, we never came back to violate this law. We never came back to violate it. Meaning that because we had hit a higher time frame liquidity point. Now, this is now where the concept of time and the price come in. And I'm not gonna go into my strategy that I use. We're gonna approach this in by using any strategy possible. Okay, but we're just gonna use the basics that is gonna give us a walkthrough, right? So price comes here. This is now London session. Remember, I'm using UTC plus 3, so to you it might not be really like what you're used to. But from this zone, let me show you something. From here, from 7 a.m. From here, that's 6, right? So let's go to 7. So from here, this is all London. Okay. So London comes in. We go down a little bit into the wicks of those hourly candles, right? Then we now later on at 11. Remember, this is the time whereby the silver bullet, guys. That's why I said I'm not going to be talking so much about the strategies of entry, because I believe that, okay, or I'm assuming right now that majority of you have strategies of entries and so on. So this is just an overview of a general market, of what really happened and why we had that bullish move, right? So price comes and jumps up. And remember, this is the silver bullet. This is the time of silver bullet, 11 a.m. Remember, this I'm using UTC plus 3. So if you're using maybe UTC, maybe plus -4 or -5, it will be different time to whatever I'm using. So maybe I prefer maybe you change it to UTC plus 3 if for us to be on the same page, right? So this is the silver bullet. The silver bullet creates a bullish fair value gap, hourly fair value gap. You can see it. This one right here. And remember, for those who don't know what a fair value gap is, I think I'll create another video. Maybe you can leave a comment down below to let me know if you'd like us or if you'd like me to talk about fair value gaps and deeper insight of how of valid and invalid fair value gaps and how they work and so on. So here we are, a fair value gap. And this fair value gap, we find that the candle that is creating this fair value gap, which is this one, because we have for a failure gap, for a fair value gap to be formed, we must have 3 candles. So this is the first candle, then the second candle, then the third candle. So in between them, this gap you're seeing here, where the bodies of the wicks do not meet, that's a fair value gap. So this candle closed back in, meaning that price was interested to coming back and filling this. So for anybody who was looking for buys, you enter at the low of that gap or at the consequent encroachment of the gap with your stop loss just below that swing low. Okay? So this is what it would have looked like once this gap forms. And apart from that, we also have a break of structure right here. Okay? See this one? This was now another confluence to show that price is interested in going up or going higher. So we have a valid bullish 1 hour fair value gap. Remember, this is on a hourly time frame, which is a very, very important or very powerful time frame. So price creates a fair value gap here after attacking a higher time frame that is on a daily price inefficiency, which was the bullish fair value gap. And now after hitting the bullish fair value gap, we create another bullish fair value gap on hourly time frame with a break of structure. Meaning what? We are waiting for price now to come into this gap. Then you place your cells right here. You place your cells right here. You enter there. Stop loss. Just below this low. And what do you target? Now that's another question, because majority of people will just target a fixed 1 to 2, which is way from my placing of this long. That's what you want to do. But what if I tell you that you can have more than that by targeting liquidity points? Because you see, a person who was targeting this, for example, this gap here would have got 1, 2, 3. Another person who was targeting, for example, maybe we had another gap here. You see that bullish, that bearish 1 hour. You see, that's 1 to 8. Although we did not get to tap it on Monday, but rather it happens on Wednesday. That's when price jumps up to the side. Remember also, we had a bearish daily fair value gap, which is this one here. So you can as well target there. It's about targeting inefficiencies so that you can get more out of your trades. And that's 1 to 11. You enter on Monday here, then by Wednesday, you already have your 1 to 11. Stress free. You see? So let us still also go back to now um, another entry for. Let's assume that now you did not take this entry here on Monday. You missed it, okay? Fine. Okay. Let's go to the next day. Next day, we are still gonna go on the daily time frame again first. Now we're checking on Tuesday. Okay, remember this Monday. Now we're checking on Tuesday. So the way that Monday closed, you realize that we opened here, dropped down, filled an inefficiency on daily time frame, came back in, went up, went higher, then came back in and closed bullish, meaning that we closed above the daily opening. When you close below the daily opening, then that's bearish automatically. But we closed above it, meaning that price is still interested in going higher, since we have not yet completely failed this bearish daily fair value gap. This one here. You see it? Let me draw it so maybe you can see it properly. This one. It was still right there. And we had to go in there. There was another one here. Okay? So we had inefficiencies, or we had valid liquidity pools to target on Monday, Tuesday, and Wednesday. And as well, Thursday, I think Thursday now, because I think on Wednesday we had already done everything we're supposed to do here. Okay? Right, let's go back into the hourly time frame. So remember that we are looking for what? For buys. Okay? For people who understand SMT, this is what I want to tell you about. If you take a look at SMT happened on Wednesday between Nasdaq and US 2000. So meaning that Nasdaq, ES, and US 30 or Dow Jones were in the same terms, moving terms, and US 2000, that is Russell, did something that they did not do. So, for example, I'll show you later how US 2000, that is Russell, took out the loss of Mondays and Tuesday, whereby Nasdaq did not. That was another confirmation of that. We were to going. We were to go up on Wednesday. That is now before this move, this serious massive move you saw here. Okay, right. So let us jump onto Tuesday. Let's assume that you did not get that trading opportunity on Tuesday. Okay, on Monday. So Tuesday comes here, and we still have valid liquidity points up there. Then now, this is where the factor of premium and discount comes in, because you see, for example, Tuesday starts in from this point. This way we have Tuesday. We have Tuesday. Here we go. That's Tuesday. Tuesday starts here, right? So this is all Tuesday. Then Wednesday. Let me also mark Wednesday. Wednesday is right there. So this Tuesday here. Okay. So if we want to mark the premium and discount of this zone. Let's start with this